Hey everyone, good afternoon. It's great to be back with you from a few days out of the office. Big thanks to Jeff and Phil and Andrea for getting everything done and holding the fort down. It always sucks when you're gone and the markets are wild and volatile. But there's really no way to control that or predict it. So you just got to go and do what you're going to do anyway. So let's jump into what's going on, what we see, and how we're viewing the technicals here with all of the weather and all the issues going on, right? So between the Ukraine and our weather, it's got the market all over the place with big, wide ranges. But what I really think the market is doing is trying to kick and scream before it rolls over. Because remember, our balance sheets are getting ready to grow significantly, and that means lower prices are coming. So the way I'm viewing the new crop corn market especially is this. If we have a carry out that's going to be over 2 billion, StoneX was out with a 2.7 billion, or I should say Arlen Suderman was out with a 2.7 billion bushel number. And that is in line with kind of how we view the market too. And when we see those kinds of numbers, you have to think, what's the value of new crop corn? Well, it's not 550, it's not 650, and it's certainly not 750 or 8. It's probably more like 350. So if you look at new crop corn trading at 530 with a true value, if we work our way down to that 350 number or 4, somewhere down in this range, you have to recognize that this entire space up in here is weather premium. The market's already built it in, and that's why even though the weather looks bullish, it's really not working higher. Now, I think that's an unpopular opinion. I think that that is just our opinion. I don't think that there's universal agreement in that at all. But to me, it really makes sense logically that if you have a 2.5 billion bushel corn carryout, your value of corn is 350. So if you're trading at 530, then you have weather premium in of about $2. That's kind of just how that math works. So over time, and as the crop becomes more certain, the corn market will take that premium out and get it down to reflect this true value. It doesn't have to just go from here straight down. It can meander its way down until we get to harvest. And I think that that's what it's more likely than not going to do. And so we've been viewing 550, which is all this stuff back here. It's the top of the daily cloud. There's a lot of stuff that has to happen for us to turn bullish, and we got to get back above this 550 level. Now, for a lot of clients, we did put on long calls back in here just as a protection mechanism to say, hey, maybe 550 is where we want to re-own. And I don't think there's anything wrong with that. I think that we're going to have to roll those down at some point, but I think that's going to be from much lower levels. I don't see anything on this chart here that looks bullish at all to me. I mean, we rallied to resistance, we reversed and came lower. We've held the daily cloud. We've been unable to break any meaningful resistance levels at all, and now we have 2 consecutive days of lower lows and lower highs with a bearish engulfing candle, and I think really all is set here to roll over and go lower. And it's going to take something really meaningful for us to work higher. Big picture on corn, I think we have to have a yield reduction event to get our yield down below 160 from the 181. So we got to lose a little, 12, 13, 14% of the yield across the country in order for us to really shrink the balance sheet and look for something higher. So it would take something dramatic like killing all of Iowa or significantly impairing Iowa, Indiana, and the eastern Nebraska area. So I know it's not what anybody wants to hear. Everyone wants us to say, hey, we're going to the moon. That is not what this technical picture is telling us and not what price actioning is telling us. So we think we need to roll over. Another piece of evidence that we can look to support that are all of our oscillators. If this was a weather scare, we should be screaming higher on these oscillators, and we haven't. We've just gotten back up into this kind of selling area where it's been met with resistance. All the way from dating all the way back to the beginning of the year. So there's no reason to think that this isn't going to roll on over and come test the lower areas again. Same thing with our stochastics, same thing with our force index. All of these are pointing to the bearish side because they've been unable to break overhead resistance and really get momentum behind the move to the upside. So I think this whole move here is very overlapping, it's very corrective, and after several days away from the big screens here in the office, you come back and it jumps at you, and it's very glaring to me that lower is where this market wants to go. So we're going to sit on that. We're gonna continue to ride that horse and until the market takes us away from it. All right, so that's new crop corn. What about old crop? Surely it's going to rally. Well, look at it. It's got the same exact setup, maybe even a little bit worse at this point. Once we get back below this $5.95 to $6 area, I think this is just going to roll on over and come back down to test it. Because, hey, we're now June, right? Approaching mid-June. So if you don't have coverage already for June, July, what are you doing with your life if you're an end user, right? You've got to have your coverage needs met. So there's no reason for you to hold a long position anymore. So I'd expect that to roll over anytime, and lower we go. So we're not looking to do anything other than hold short positions until this market gets above these clouds. We get up above this, we get some more bullish fundamentals, and we start to hold all these levels. Maybe we'll talk a different tune, but for now, lower is where we want to look. Okay, now let's look at beans. Those have to be bullish, right? Because they were up, they've been up. I mean, look at old crop beans. They're up straight up $1 from last Wednesday's low to today's high. That's almost $1 to the penny. And surely that's got to be super bullish, right? I do not think it is at all. In fact, I think it's overlapping and corrective. And given the amount of swings that we've had, I think that this is toppy. I think you've got a failure today to break out to the upside. We failed to hold yesterday's high or Monday's high. And I would look for selling below 1350. If we get that in the overnight, I'd look for that just to roll over and accelerate. Same thing on our oscillators over here. This dollar rally has led this just barely back to the overbought territory or the sell zone. On the RSI, it's failed to break out to new highs, so you have very little momentum, very little strength into here. And on your force index, same situation. You've gotten right back above the zero line, which is an area that is ripe for the selling. On some of these other contracts, and we'll look at this in new crop, but we're right back to the 26-day and 9-day moving averages, which are right here. And anytime you're in between these two in a downtrend, that is called the sweet zone, or a perfect spot to sell. So you've got a conjunction of all your oscillators right trading into the sweet zone, and I would expect that to go ahead and roll over and get and have selling commence. Anything below this 1491, 1391, 13, you got this low, you got this low, and you got all these lows back here in September. In October, so call it 1385 to 1391. Anything below those, we're certainly going to look bearish. And even if you trade up into that, you're still below your cloud. So you've really got no reason to be on the buy side here until you get through all of that, and you've got over here, and you're above this cloud. So patience, and you just got to sit and grit your teeth and wait for it to roll back over, which is what we're happy to do. Okay, let's look at new crop beans. They're not good at all. They're in the same exact situation. Oscillators right back to sell zones, sitting right in the sweet spot between the two moving averages, below your cloud, have failed to take out any meaningful resistance levels whatsoever, and really just kind of look like they want to roll over and die. It's no different than corn. Our balance sheets are getting bigger. There's huge crops in South America. There's no reason to think that we're going to shrink our carryout, which we would have to have in order to justify higher prices, or you have to get some kind of demand shock or some type of supply shock to justify higher prices, and we just don't have it. So lower we should look. Okay, wheat. Hey, you got Russia, you got bombs going off and dams breaking and all kinds of bad stuff happening in the Ukraine. And 40+% of our wheat crop is tied up over there. So surely that's bullish. I don't think so at all. We tried to rally before we attacked this low. It's failed. Today was off big today, back down through our cloud, through our hedge lines. I think lower we go, and we're going to come attack these lows down here, and I think this time we're probably going to break them. My view of this move here is that this is very impulsive, and you've got it in 5 waves, and now you've got a correction, and you've got a downward move. An even worse interpretation is you've got a 1-2, 1-2 count brewing, and this is rolling over into a 3 of 3 type action, which could really propel it lower. So our advice and our recommendation is everybody stay hedged. Don't try to overtrade it to the long side. It was really hard. In fact, we did come out of some hedges over here, but we're going to put those back on because I think the lower prices are more likely than not. And if we go higher, awesome. We'll deal with higher prices at a different time, and we'll see what happens. But I think for this wheat crop, I think the story's written, and we're going to head lower. I know that's bearish. I know we don't like to hear it. We don't even like to talk about it, but it is what it is, and I don't think these charts lie. They've been trying to roll over and just waiting for the right time to do so, and I think that time's probably closer than not. And so you may as well stay to the short side and look for re-ownership opportunities later. And in the meantime, you got to manage your risk. All right, that's 11 minutes. It really is great to be back. Thank you for your time. Thank you for listening to us. Remember, there is significant risk of loss when you're trading futures and options, and it's not suitable for everyone. Past performance is never indicative of future results because you just can't really prognosticate the future, and certainly we don't have any information that others don't have. We just try to do our best with it. Hope you guys have a great night. We'll talk to you later.